Hello, everybody, and welcome to today's panel on decentralized finance for institutionals and asset managers. Thank you for coming and tuning in. We're going to speak today about the evolution of decentralized finance in the more recent period. Have a look at what's going on at the moment. There's more attention being drawn towards DeFi. Recently, there are talks now of DeFi 2.0. Which would be all about more interoperability between protocols. And we're going to have a look at what the view is and what the status of asset managers and institutional investors, because we can see that the average transaction size for decentralized finance at the moment is quite large, or a lot larger than one would expect from only private investors and users. And with me today to discuss that are Connor Payne from Block Size Capital and Timo Lehns from Swan Markets. And I would ask them now to begin with a short introduction. So Connor, if you would please introduce yourself and your company, and maybe in a few words, just summarize what decentralized finance means to you as a quick introduction. And then Timo, you will do the same afterwards.
Sure. Thank you for the intro. So I'm Connor Payne from Block Size Capital. What we do is we offer high-end infrastructure so that asset managers and institutional investors, family offices can analyze and trade and manage their digital assets. We currently have a couple of different options for them, so they can either use our technology as like a software as a service platform and bring in their own exchange accounts and connect to multiple different exchanges, so they get more liquidity and better price performance. Otherwise, they can utilize our digital assets prime brokerage model, which is offered together with fully regulated German banking partners. I'm in charge of like our DeFi sort of operation, which is still in a bit of an exploration phase, I'd say. Currently, we are partnered with Chainlink as a node operator for their infrastructure. So that was sort of our first sort of branch there into the DeFi world as far as operating that infrastructure, as well as taking some of our data. We're currently working with them so that we can bring data on chain with Chainlink oracles. As far as like what DeFi means to me, I mean, I think we're currently in the middle of a huge revolution, which is going to disrupt basically how markets are basically known, being built from the ground up. So I think this sort of open access and these markets being run by fully autonomous code is something that's very revolutionary, and I think it's really just getting started. So it's an interesting time for us, and so yeah, that's it.
Thank you. And Timo, what about you?
Yeah, so, I'm a co-founder of Swan Markets, and we're based out of Berlin. We are a regulated DeFi platform that runs under BaFin regulation in Germany. And, of course, that's, basically a first. We haven't seen any other platform that's doing that in the way that we're doing it. And what we see as the key benefits here are like, you can basically use the architecture of DeFi, which means that you'll still have like, self-custody and transparency and all the other kind of benefits, and let's say immediate settlement as well. And a lot of the around like how you operate like a DeFi model for financial products. But then you can also, what we've done is to combine that with basically a regulatory platform, which means that you have like some certainty in terms of like who you're dealing with as a counterparty, what is the quality of that counterparty in terms of like them being able to report on regulatory matters or deal with any kind of issues. And we think that's important for many kinds of investors that are not comfortable with engaging on let's say, certainly not on anonymous platforms, but even on like unlicensed platforms, which are two different things. And the big opportunities we see then is that basically we'll be able to onboard both investors that wouldn't engage on DeFi otherwise, but also maybe more importantly is also that we can onboard assets that the unlicensed platforms or DeFi projects can't onboard, because for some of the types of like, let's say, securities, you have to be licensed in order to deal with those from a transactional point of view. And therefore we see us as kind of one of the participants that will expand the universe of available assets that can be traded or used on a DeFi architecture. So yeah, I mean, we're super excited about developing this going forward. And I think it's still very early days, even though we had like the rapid growth last year in DeFi, going from basically, 1 billion to 100 billion in TVL. There's still a lot of potential in this space. And so, yeah, that's kind of why we're here and why we're trying to kind of help new capital to come into that ecosystem, because the opportunities are really great.
Fantastic, thank you. And so I think with that introduction, we can see that we have the perfect two panelists to discuss on this topic, both involved in the field of DeFi, both having to do either with regulation or institutional investors in general as part of their business. And Timo, I would like to stay with you quickly. And I wanted to ask you, in regards to the interest you see from institutionals to enter decentralized finance, maybe through your regulated market or otherwise, where is this interest mainly spiked from? Would you say the potential for large returns through lending or liquidity provision, or what is the part about DeFi that is so appealing for asset managers and institutionals?
Yeah, I think it cuts across like a number of different like product types in the DeFi space. I think on the lending side, we're seeing that there's a lot of like institutional funds that want to get into, basically get like into the yields that we're seeing on DeFi, which are in many cases single digit yields for the main coins in the economic environment that we're in. So I mean, and then of course the issue for them is that they have to know like that the capital that's participating on that particular DeFi platform has been like identified on the other side. So they couldn't basically engage on borrowing or lending capital into something that's like a non-KYC kind of counterparty, because then they wouldn't know like who's providing the capital or who's using their capital on the other side. And so they would have to provide that investment into a platform that's basically KYC'd or even a license, depending on their requirements. So, but that demand is there. And also like just from an outside point of view, I don't know if you've noticed that Aave has launched this platform that they call Aave Arc, which is obviously on the lending side. It's a response to institutional demand. And, it just goes to show that even like the biggest lending platform out there have to create like a separate structure in order to accommodate for institutional capital. So that demand is definitely out there. We're also seeing from, let's say, more of the high net worth and family office type investors that there's a lot of interest in like staking products, for example. So we see that like ETH2 staking and other kinds of staking products are really interesting. Again, just kind of if you're already long ETH, let's say, and you think that ETH2 is going to be a thing, then why not get like Ethereum, which is overlaid with 6% additional, ETH on top. So those kinds of products make a lot of sense for let's say investors that are somewhat already savvy in the crypto space, but they just want to have like better returns. So that's definitely a demand that we're seeing. And then also like in general, just like people that want to participate in the innovation in DeFi, but don't necessarily want to go to like a Pancake Bunny platform to put their money into, but they want to have something that's a little bit more, identifiable and understandable. And I think we're seeing that there's a lot of capital that's coming in from, I wouldn't say institutional, but professional investors that have certain structures by which they either invest their own capital or somebody else's capital, and they're just waiting for these things to kind of become more mature from even from a custody point of view. You just have to be able to use your whatever you have chosen as the kind of your custodial solution. So in our case, for example, we've integrated with Copper's custody solution, so you can basically work directly out of a Copper account and participate on a DeFi platform. So yeah, I think broadly speaking, I would say the demand is there, but the way that they want to really being met by the market yet, because it's so early.
Okay, Understood. That's very interesting insights, Connor. Would you agree with that, or do you think there's also a big demand for the products themselves, or do you maybe see that people are more interested in simply investing in the tokens or the governance tokens of such protocols on a speculative basis?
I mean, I do certainly echo a lot of what basically everything that Timo said there. I mean, we see these institutions and they get a glimpse at some of these yields being produced in DeFi. And it's not only, it doesn't even have to be with like ETH or any sort of altcoin or anything like this. You can get great yields with stable coins. So they see this and they want in on the action. The only issue is, which I'm sure we'll discuss, is some of these barriers to entries. But I mean, we see the success of Fireblock Swarm. We see Aave Arc and other different platforms that are sort of accommodating for this, and that infrastructure is being built right now. I mean, we've seen reports from like PwC that said like 47% of traditional hedge fund managers are looking into investing into crypto. There was Intertrust, a survey that found that hedge funds are expected to hold 7% of their assets, equating to like $312 billion in the next like 5 years. They want to allocate that towards crypto. There's all sorts of institutional money sort of being brought into DeFi, and that interest is definitely there, and it's just going to keep growing over time as the tools are made for it.
Okay, so that's again a great insight. I think it's super cool to see that. Well, for me at least, it's cool to see that this interest is there, and that people are also, of course, have to be to a certain extent educated about DeFi to understand how they can use it in this way. Would you say that this is something that the decentralized finance community as a whole is also excited about, or maybe something that they see with maybe even a bit of resentment that this institutional money is coming in?
Yeah. Well, yeah, go ahead first.
Sure. I mean, for this, I don't want to like, speak for the DeFi community. I think that there certainly is some sort of vision that's sort of like this hopium, right? That there's no more institutions. Everyone is just purely interacting with each other, and maybe way down the line, something like this can sort of happen. But I think if anyone doesn't want institutions to be involved right now, I think that they should probably revise that thought process, because there's not going to be some sort of sudden change that occurs where everybody's now using DeFi. The truth is that we need some sort of bridge between CeFi and DeFi. They need to be some sort of hybrid models, so that we can sort of stop just lending and borrowing and having these things with just sort of blockchain native assets. And also, I mean, that's one of the things that Swarm Markets is allowing for, right? I mean, in this sort of regulated environment, you can start to bring in other interesting assets, which DeFi alone it just can't do. So as far as like the sentiment, I think that I think people do want it in the DeFi community actually, but if they didn't, I would probably be willing to have a little bit of a debate with them at least as to why it's important that we do bring institutions into the industry.
Yeah,
okay.
I mean, I would add like a couple of aspects that we've been working on in order to make this like basically unidentifiable from normal, whatever you would call DeFi in the kind of in an unlicensed way, so that basically once you've like onboarded with Swarm Markets, for example, then you can't really see a difference, like whether you would be using Uniswap or whether you'd be using Swarm Markets. It acts exactly the same way. So it's basically what we do is that we put an NFT into the wallet that you're qualifying for participation in the marketplace. And then once you have that NFT, you're able to do, whatever you want to do on our platform. So it means that like you're using, MetaMask wallets, or you're using a ledger connecting into the platform, or you're using, like I mentioned, Copper custody for more institutional custodial solutions. But it looks exactly like when you would be using Uniswap or Balancer or any other kind of DeFi application, and you can't see any difference. So from a usability point of view, I would argue that anyone that's like serious about, for example, trading on FTX, they would have to KYC and onboard with FTX in the same way. And it's not a huge burden on the user once they've decided that that's an important venue that they want to participate in. So I think, to some degree, I think we're able to kind of remove some of the obstacles along the way. But also, I mean, I definitely, agree with Connor that this is a coexistence kind of environment where, on one end, we have these like extremely fast moving, innovative, DeFi platforms that are just kind of testing a bunch of things to see what works and just like really pushing innovation of financial services, which is fantastic to see, right? Because like there's a lot of cool stuff going on in DeFi right now. And a lot of it, like some of it's not going to work out. Some of it is going to be really, really big. And then in the end, some of that is that's a more regulated / licensed environment, such as what we're running, and some of it will not, right? I mean, some of it might just kind of stay in like the kind of the unlicensed spectrum as well. It depends on what the use case are, and depends on if they're dealing with securities or not, and it depends if there's like an AML situation that needs to be clear or not. So I think the community in general, regulation kind of makes things a bit more complicated and slows things down. So in that regard, it's not really something that everybody wants if you're on the developer side, because it is going to make you need to kind of consider other aspects that you wouldn't have to consider as an unlicensed developer or platform. But then on the other hand, I mean, if that means that we can actually expand the total value locked in DeFi platforms by a factor 10, then there's a lot to gain from that as well. So I just see that like, yeah, maybe not everybody is super excited about it because they don't see the market opportunity. They think it's fine as it is, and that's okay. But then we're seeing that there's a huge opportunity to build something that's licensed, and then also we're seeing that there's quite a bit of regulatory kind of attention towards DeFi right now, and so we just decided to build something that was kind of clear from a reg standpoint from the beginning, whereas a lot of other platforms obviously now have to respond to regulators in various ways. And in the end, we're going to find out exactly where the market needs to be in order to be kind of compliant and sustainable long term. So.
Yeah, and just one more thing to add, sorry, just because if we have some sort of DeFi protocol and we add another layer that's, sort of like permission or granting some sort of permission access, I mean, there's still that bottom layer of DeFi, which is still completely permissionless. And I think as long as that's in existence, right, then I think everyone should be happy.
It sounds like a good solution, good compromise as well to the issue, to that we have going on. And Timo, you mentioned a bunch of times now having securities or assets that we know from the real world, let's say, on decentralized exchanges. And I wanted to zero in on that maybe a little bit more and talk about it, because at the moment it is still a struggle to simply have these assets and securities traded via blockchain in general. So not even speaking of decentralized exchanges and decentralized manners, but even centralized exchanges. So where do you think this, or how long do you think this change might happen, and where do you see it going, that we'll have normal stock, for example, trading in the same way by decentralized exchanges through liquidity pools and such, as we see with, tokens and DeFi at the moment?
Yeah, I think because, like you said, in order to bring those products to market, it takes a little bit longer time, and that has to do with not only like the licensed kind of trading venues that you need in order to operate that activity, but then also the kind of the prospectus filings that are required for the securities themselves, which would then have to accommodate things like tokenization and aspects that are kind of required to be there in order for them to be traded on blockchain or in DeFi or in like you say, like in any kind of centralized or decentralized environment. So we see that this is a 2022 activity, and that's where it starts pretty much. And once you kind of crack one solution, then I think it's going to open up quite a lot for other solutions as well. And this is not only for tokenized stocks, it could be things like fractionalized NFTs, for example, which are, in the end, like, a lot of those will be securities as well. A lot of like the yield bearing kind of character of like, even like revenue shares from intellectual property and stuff like that packaged into like an NFT type environment. A lot of that is going to be securities as well. So once you kind of get into like the nuts and bolts of what some of these things are, like public stocks being traded on blockchain is obviously a security, no doubt. It's just a question of like, how do you do it so that it maintains like compliance across various jurisdictions? And then things that are a little bit more uncertain are, like I mentioned, NFTs, where I think there's a lot of activity right now that is kind of, it's great. Like, again, it's like massive innovation, and some of those things are being brought into DeFi. We're working on a concept of basically creating NFT bundles, which allows people to kind of create the bundle with some NFTs that have some commonality associated with them. So they basically fulfill a number of attributes. And then you can kind of add NFTs into that bundle or remove NFTs from the bundle, which kind of helps with like commoditization of an NFT basket. And then that helps with price discovery and collateralization, so that you can use NFTs as collateral for, for lending and other stuff. So those kind of things is what we're working on. So yeah, my answer to you would be, it's definitely a 2022 kind of phenomenon that's going to happen at broader scale. And, it's not going to be just us. It's going to be a bunch of different projects that, tackles it's very much making, but because you have to go through these filings and other processes, it takes a little bit longer than just kind of pushing something out into DeFi. That's basically not a security.
2022 thing sounds good to me. That's pretty soon. Thankfully.
Yeah.
Connor, your thoughts on it?
Totally agree. I think one thing that really stands out from what you just said, Timo, is just the utilization of NFTs, right? Like, now the excitement around NFTs right now is pretty amazing, but I mean, the potential for, NFTs as sort of non-fungible tokens doesn't only lie in like JPEGs. Like right now it's really being utilized for, but as IP, like I see this as being like a huge thing that's going to be being adopted over the years to come. But yeah, it will increase, the TVL for DeFi, but just it's going to improve the capital efficiency so much. And I think that this is really necessary for the growth of the DeFi ecosystem. Once we can actually start getting some equity into the DeFi ecosystem, because I think if we're really thinking about this in the big picture for like a global scale of DeFi being adapted or adopted, there's so much equity in the market which we cannot trade right now because it's all owned by like private companies and stuff like this. And as soon as this becomes just a go-to standard where companies can sort of have their equity out there for anyone sort of to interact with, I think it's going to be an explosion for DeFi.
Yeah.
Oh,
I would even add to that like people mostly kind of think about it as kind of almost like vertical phenomenons, in the sense that like if you tokenize a public stock or you tokenize private equity, then all of a sudden that's like available on chain and that can be purchased and invested in. And that's great. But I mean, the big benefit is going to come from like the composability of DeFi. And once you start thinking about these things horizontally and you start creating like completely new constructs or products that didn't really exist before, that's where the potential really kicks in. And that's super exciting. And that's like really hard to predict like exactly what those things will be. But I mean, once you kind of see some of these assets come on chain, then like the innovation can just continue, right? And that's, can create really, really interesting products and combinations of things. And that's really like the benefit of, bringing these things into a digital infrastructure that is not stovepipe, but that's actually has like all these horizontal layers that you can kind of use to create like super cool products on. So that's what we see, like that we're expecting a lot of innovation on chain.
So would you maybe even say that for decentralized finance, the killer app, as they like to say, isn't even there yet? It's still something that's coming because of the amount of innovation we see. It's still something that might be on the horizon. We don't even know yet what the full potential is of this thing that we're all working with and excited
Absolutely.
about.
Yeah. No, it's not there yet. I think some of the no-brainer stuff like, peer-to-peer lending, because Web3 is basically Internet of Value. Peer-to-peer lending makes a lot of sense. That's already there. That's cool. I think AMMs in terms of liquidity model as well are a really cool innovation. It's like definitely has like some benefits over central limit order books in some cases. And there's like continued innovation on that as well to improve on that. But that's just like almost like the initial use cases. It's like the composability when things start combining things like, if I take this and then I move that over here and then I get, something else over here. Like people that are doing yield farming, for example, in normal DeFi right now, are basically kind of hopping around across various networks, doing really cool stuff. And I think we're just seeing the beginning of that right now.
Yeah, I totally agree. I mean, I wish I had the vision to sort of see what's going to be created here. And I don't think it's going to be like one killer app or thing. It's just going to be a total rethinking of how we think of markets. And what that will look like exactly, I don't fully know. But I think that we still have amazing things to come. Because as Himo said, we're sort of taking these concepts of finance as we know it and making it decentralized, but we also see these newer things being developed which we haven't really thought of before. And I mean, one example is, I don't know how great of an example it is, but like flash loans and stuff like this. But there are some concepts and things, automated market makers and stuff, and AMMs. There's really cool things which are going to be built, and I think that it's just going to open up all sorts of opportunities.
Fantastic. Yeah, I think I would agree with that sentiment from both of you. But then, what do you think the big challenges are that there are to overcome? So I guess maybe apart from regulation, that is something we've spoken about. Of course, if you want to go deeper into it, you can as well. But yeah.
Yeah, I mean, I think obviously if you're running like, $14 billion on a platform and then all of a sudden somebody says, well, you can't do that in that particular way, that's a problem, right? And then I think the challenges are depending on where you come from, right? And what your legacy is in some way. So, I mean, to backpedal a very large platform just because of kind of that's actually a very big challenge, right? Because then you have to either segment your user base in a different way, or like, I don't know if you've seen, like, for example, 1inch is now asking you to basically ensure that you're not operating the 1inch transaction within the United States and things like that. So that's, and those are just like, results from regulatory kind of enforcement. So those, I mean, that's a real challenge for existing DeFi platforms that have like kind of captured the first wave and grown very big. And I'm hoping that they'll find like a way to balance those aspects so that they can keep growing, right? And then we're at this other end of the spectrum, which is like we're introducing something that's new in the sense that regulated DeFi, but wouldn't that be centralized, decentralized finance? And it's like, how does that make sense? And then so our challenge is more to articulate like what are the benefits of doing that, and how do you actually build the regulatory kind of hooks into a platform in a way so that it doesn't stifle innovation or kind of do something to the user experience which is suboptimal. So I think those are our challenges, and then more established platforms have their own challenges. So I think we're all kind of working our way into this market from different perspectives. So I think we just have different things to prove to different constituents, and so that's kind of how I see it.
I can continue with that as well. I mean, a lot of the things are echoed, I think, quite frequently, and that's, still smart contract risk and, obviously like compliance. I think that there's like the legitimate argument to be made for like counter financing of terrorism and stuff like this for these types of projects. I think we need better analytics so that we can judge risks of these DeFi protocols and decentralized applications. And for the specific case of like institutions, we need to keep building ways that entities can enter the space in a private way where, they can still enter the market, and it's sort of known that they are verified, entities, whether that be a company or a single user. And also reputation, like that's something that's lacking right now in the DeFi ecosystem. So there's no like crypto credit score that's really sort of taking hold. And I think this will take a combination of the traditional finance and DeFi, but I think a lot of these things are still being built right now and put together. I heard, I forget who it was, someone mentioning just operational risks for traditional finance companies right now, because how you manage, who's going to control any sort of, private keys, or even if you're choosing what to invest in right now, just who's going to be in charge of this, what decentralized application protocols on what network. There's all sorts of room for error, especially if you're a large organization, where things could sort of get mixed up and then people interact with the wrong, protocols or accounts and stuff like this. So I think it just takes a little bit of getting used to. But yeah, I'd say there's still some challenges for sure.
Okay, that makes sense. I think the part about the operational risk that you mentioned is quite interesting, probably something that not a lot of people have in their mind in the beginning, and then they think more about just on the side of DeFi. So maybe to continue on the challenges or something, how do you think these can be overcome? Do you think there's a need for much more education as well for lawmakers and regulators, or maybe they just need to chill a bit, or what do you think needs to be done so that we can best handle these challenges and move ahead?
Well, so what you see on the investor side is that investors adapt as quickly as kind of they are able to, or in terms of like what makes sense to them. So even with things like venture capital a few years ago, like 2017, when basically there was a lot of projects that were only kind of being financed by tokens. There were a lot of VCs that couldn't invest in those projects. So that basically, because they didn't have the mandate to buy digital assets, so they only had mandates to buy, convertible notes or equity. And then, fast forward 4 years, and then you have, obviously Andreessen, announcing a $2 billion fund to buy whatever to tap into the crypto ecosystem. So whether it's equity or tokens or combinations thereof, they're going to do all of it. So they adapted pretty quickly, right? And from an operational point of view, they've just kind of built out the teams that are required to basically tap into this market. Now, so if you look at like, other kinds of institutions that are not as, let's say, tech oriented or so, yeah, I agree with Connor. It's going to take time for them to kind of adapt their ops procedures, as well as mandates, as well as risk models and everything else to kind of participate in this ecosystem. And then on the other side of that, we're also seeing basically initiatives to kind of meet them closer to where they are. So like, for example, the ETFs, the futures ETFs that launched last week in the US, those are basically attempts to kind of meet the investors where they're already making their investments. So that it's like, oh, so, you can show up like in your normal venue or at your brokerage and participate in this ecosystem, because now that product kind of built into where they usually invest anyway. So buying in products that you can just kind of buy off your brokerage account, and then you've kind of met the demand where they're already active. They don't have to adapt very much to something new, but they can just kind of invest in a more traditional way, but in assets that are obviously related to crypto. So.
As far as like having to explain DeFi to any sort of regulators or legislators, fortunately, I haven't been burdened with this task, but I can certainly imagine that trying to explain, this idea of an open market, being accessible by anyone in the world, not being run by necessarily companies, but being governed by code. I would imagine that there's maybe just a few, savvy legislators who might actually grasp this concept. And I think unless we're very clear what the benefits that DeFi can have in general, that's probably a very scary thing. So, like I said, fortunately, I'm not burdened yet with having to have these conversations. But I certainly think that there's going to be a lot of heads being scratched at this point in time. But it does seem to be the case, that some progress is being made there, thanks to some heavy lifting. I'm pretty sure the Swarm Markets team is doing some of that stuff for us.
I mean, so we've been doing that for we're 2 years into that process, right? So it's been a long journey to get to where we are with like an open platform as of the last 2 weeks, but yeah, it does take a lot of time to go through that process and to get it right, and then it's like, to get everybody comfortable with what it means to be on something like Ethereum instead of centralized servers somewhere in a data center. And so there's I mean, part of it is educational, obviously, but the other part is also like just kind of describing like how you're meeting the requirements that a regulator has around certain activities, because they're regulating the activity, and as long as your activity meets their requirements, then it can continue, right? And it can be approved. So, but obviously a lot of detail and nuance behind that, so this is like an evolving process for us as well. But at the same time, we saw that the value of having regulatory clarity is really high. Like when Germany went out and said like, oh, we're going to look at crypto basically as financial instruments, in the sense that any kind of trading activity is going to require a license, and we're just going to apply the same kind of legislation that we already have in financial markets, apart from the basically crypto custody, where they introduced like a new law and a new specific license for that particular purpose. But I mean, everything else is kind of as per normal from a classification standpoint, and they're one of the few who have actually kind of been super clear about how to deal with crypto in the world, I would say. So that and for us, that's just meant like, oh great. I mean, we were already coming from like the security token space as a team, so we were already kind of quite deep into a regulatory kind of thinking and understanding. And then when they just said like, yeah, we're just going to apply the same rules to everything, whether it's security or whether it's a digital asset, then okay, great. Then let's just move into that environment, because then we can operate freely across crypto and securities, and with the same operational model under the same licensing scheme, basically. And so that's why we think it's super valuable. Whereas, where you have other jurisdictions where they kind of keep flip-flopping, or they haven't defined like what it actually is, like what is crypto, what is DeFi, what is everything, and they just kind of keep maybe grasping for some lower hanging fruit in terms of like enforcement action. That's going to take much longer time for those markets to develop into something that's a positive kind of, I would say like a positive market development.
Okay, for sure. Lots to unwrap as always. Timo, we also actually have a question from the audience for you. So the person asked or says that you mentioned that the user interface and the user experience in Swarm is quite similar as what people know from DeFi when they use a maybe different exchange, MetaMask, through their custody provider, right? But the question is, will KYC not result in customers having to trade in separate pools versus the permissionless DeFi protocols trading pools?
Yeah, sorry. So you're breaking up a little bit there. So the main question is that whether they have to trade in separate pools versus open pools. Yeah, so that's a question of counterparty. So in order to trade in, for example, our pools or anyone coming into as a kind of a, let's say an institutional participant or something like that, they would have to know that everybody that's providing liquidity or participating in that activity, being a, let's say being a counterparty on the other side of a trade, would have to be qualified by the same measures. So this means that, you know, it's really hard to just take, like, let's say liquidity from Aave and just slap that straight into a pool that we have. We just cannot, because they haven't had the same rules around qualifying capital or liquidity that goes into the pools. So, but what we can do is to take another partner which has similar procedures that we have with regards to KYC and AML, and onboard their liquidity onto our pools. So it all comes down to, like, what does it look like when you qualify your users, and what's your AML procedures, and do they meet the requirements that we have, the same requirements that we have? And as long as they do, we can just expand the network of liquidity across multiple platforms. So that's how we view it. It's not that, like, we don't see it as our task to build up like a verticalized solution that's like, oh, you can only participate here if you're, you know, part of our protocol and have gone through our qualifications. But we can actually cross-connect a lot of different DeFi projects as well as centralized projects into what we're doing, as long as the qualification standards are the same. So.
Okay, I think that's a good answer. I'll keep you updated whether there's a follow-up in the audience, but I think that should have answered the question. And Connor, I have one for you as well. And I mean, we've kind of discussed this already, but I guess for this particular audience member, maybe if we can reiterate it very quickly. The question is, for institutionals to be more involved, what's missing? If they're ready to allocate more, then what will be the trigger? I think we've kind of had a discussion about it. If you could be so kind as to sum it up.
Sure. I mean, there's the normal, you know, talking points of, you know, the compliance aspects, as, you know, smart contract sort of analysis for the risks there and everything. But I think actually one hurdle is actually just the infrastructure itself. For example, I think this is where we're really starting to see the innovation in terms of scalability of the protocols. So that means, you know, is it going to be, you know, protocols like Solana or Polkadot or layer 2s and stuff like this. But I think in order for more institutions to really start, and not just like investing, but sort of like integrating with their day-to-day like activities, it will require a large degree of scalability. And since, you know, a lot of these are still in their beginning phases, I think it still needs to be battle tested a little bit more too, for that, you know, to take place. So I think we just have, you know, wait a little bit as far as like to see these get a little more battle tested. Because I mean, Solana, for example, is very fast, arguably centralized right now still, but and it's got some tools which sort of make it sort of really great for, you know, trading infrastructure and such. But not too long ago, they had their outage of 12 hours and they had to sort of get all of the node operators to restart at the same time, which is not very decentralized. So it's still like a playground. It's still being developed. It's still in like a beta phase, you can call it. So for these technologies, I think we just need more battle tested infrastructure.
Would you say then that I think the word playground is interesting. I think beta is a bit better because it is, after all, a playground with very expensive shovels and very expensive swings and very expensive toys in it, basically, and a lot of money. So
for me, it's not a playground. For some people, maybe it's a playground. Yeah, but you're right.
Yeah, but I mean, it's a good point, right? I mean, it's one of those situations where you kind of need to know that what you're running on actually kind of is resilient. And that goes Ethereum, and now Ethereum has its own challenges, obviously, right? We think that some of them will be resolved next year, but at the same time, we just announced last week a Polygon implementation But then again, once you're on Polygon, then you have the same, even if it's EVM compatible, you still have like, okay, that's kind of a new thing, right? Both for users as for others. So I think, but yeah, I think Ethereum has been battle tested enough to have like sufficient kind of, amounts of monetary value on it to be proven to be reasonably stable. But right now it has like obviously the longer term issues of like transaction speed and volume, and then of course right now in the short term also cost of transactions, right, which is kind of a barrier for certain use cases.
Absolutely. Yeah, as you said, Ethereum has pretty battle tested. It's purely in the range of these upgrades, these cross-chain interoperability and things of that sort, which still are being improved at the moment, which maybe we need some more time on.
Would you say that it's a good thing or a bad thing that these protocols, especially the younger ones, the younger solutions, are being battle tested in that sense, like live on the go? Because I mean, there's different approaches. I mean, of course, in blockchain or in this ecosystem, once it's there, it's there. But there's also, of course, always the idea to test things before they go live. Or do you think that's something that's maybe in this ecosystem and in this world no longer possible because you just don't know what people are going to come up with and where it's going to go?
Yeah, to some extent, when you get to trying, you can't really like battle test infrastructure at this scale with some virtual machines like that you're just setting up on your own like local network anymore. There's just things that just occur which are unanticipated, and that just takes a little bit of time, I think, to sort of the same way Ethereum had to do the same thing. So yeah, I think it good or bad, it's probably necessary. So I think it's great. I think it's great that we can sort of see these new technologies, these new sort of consensus algorithms. We can see ZK technology and rollups and all this stuff start to really be put into practice, because I think it's just going to evolve the industry a bit more, and there needs to be some people who are exploring these.
Yeah, I think the whole like the smart contract audit process and all of those things are becoming better and better and more mature as well. So the whole, I mean, to answer your question, yes, I mean, they are being tested in live because like Connor said, it's the only way to test it at full scale. But at the same time, there's a lot of value in like actually doing like proper audits and, identify some of the attack vectors and other things that might be suboptimal or whatever you want to call them before you launch like at a broader scale. And I think that process is kind of crypto's way of developing a software process that actually works, and it is going through test nets, it's going through smart contract audits, and then finally launching something. And yeah, you are probably going to discover some things, but at the same time, that's the only way to do it. And then once you get to a certain level of TVL on any DeFi protocol, then that's kind of I suppose the testament to that people trust it. And yeah, it is a kind of a scary way to test things out, but that's how Web3 works.
And there's also canary networks, which actually have some value on them, but it's still known that it's still a testing type of environment, before it goes into the live platform. The audits are getting much better, and it's, obviously becoming more of a standard right now. So these are being improved. It's to me all part of that battle testing though. It's just all of this is just being improved right now. So.
Exciting times for sure. I think we have about 10 minutes left. I want to start slowly but surely leading us to, or going towards the end of the discussion. We spoke earlier about what challenges there are and maybe what's going to happen next. So what the killer app would be, where we're going to be in the next 5 years. And of course, there's no way to predict it. So I think I would like to phrase the question in a different way and ask, beginning with Timo, then moving on to Connor, not where you think it's going to be, but where you want it to be, what your vision for it is, if you got to choose.
Yeah, I think there's definitely two vectors that we're developing that we think are essential going forward. One being like right now you kind of have to be reasonably savvy DeFi user to be able to tap into any of this stuff. Like, it's not for everyone. Like, if you start with the whole MetaMask experience and then you kind of need to figure out how to handle wallets and stuff like that, it's not something that like a mainstream audience would actually kind of accept. So I think one development that we're basically focusing on is like basically hiding the complexity of blockchain and Web3 so that it becomes like super accessible, because that's definitely necessary. So in the coming years, just being able to use this stuff without really knowing how it works under the hood. I mean, you don't have to know how email works behind the scenes to use email. So it's one of those things where as this technology kind of platform matures, then usability comes in and improves, and then all the complexity pretty much gets hidden. So that's one vector that we're focusing on a lot. And then the other piece is more like developing like the components, or like let's say, because of the composability, we want to make sure that we have the right kind of components and ecosystem built around us, so that any kind of institutional capital can come in and do what they find interesting, or other organizations can come in and create new financial products with the help of what we have already built. And then so that basically we can provide the building blocks, but then somebody can create like additional innovation on top of that, like whether it's a fund manager or something else. And I think we're not there. We're still building the building blocks. Like there's like, and if there's composability, it's like us doing the composability. It's not somebody else. I think that's like just kind of really making this like a more mature and accessible ecosystem for anyone who wants to build like regulated financial products. The direction where we're heading. And then like as I mentioned, just kind of fixing the usability, and then there's a lot of like under the hood stuff that we need to build as well, just to kind of simplify reporting requirements and a lot of the other stuff that needs to get built out in order to kind of provide like full institutional quality products. So yeah, I mean, in the next 5 years, it's just like making this more mainstream, making sure it's easier to adopt for investors and anyone who wants to build financial products. And then if we get that right, then 5 years from now, we're basically at not 2 trillion, but a much larger number in terms of like the value that's being kind of processed across Web3.
Yeah, from my perspective, I think that's sort of like a great outlook, to have for DeFi in general. I think that we're going to be seeing a lot more DAOs. I think that there's going to be, just more of that in general. I think this sort of cross-chain interoperability is going to be built out in a lot better ways. I think we're going to see the sort of connectivity between, the real outside world to blockchains really start to progress as well. Whether that, through like centralized Oracle networks and such. The reporting tools for basically everyone is going to be, I think, improved greatly, as well as a sort of evaluation for risks. I think we're going to need insurance really starting to take a stronger hold, and that might not be only achievable through DeFi itself, but it will need to take some sort of interaction with these like centralized, institutions who sort of take that on to, give institutions in particular the comfort that they need to interact with these smart contracts and everything. But yeah, through NFTs or whatever, we're getting more and more assets onto blockchains, I think, in 5 years. And I think the total value locked will still be, of course, a great indicator, but it's sort of missing this other aspect, which is, what's actually being utilized in the network. And I think that utilization of assets in the network is going to be just, like huge in 5 years.
Okay, fantastic. So you would say that maybe there's a problem right now, and that things are not, the utilization is fairly low. There's just a lot of, I guess, money and speculation being pumped into it, and that's something you would like to see changed.
I would certainly like to see, some more utilization than just, the value being locked for, providing liquidity and stuff like this.
Okay, of course. Yeah, I mean, I think very, very interesting topics. You touched also again on interoperability between the networks. I think, I mean, there's some really interesting stuff in that regard going on at the moment with some new stable coins that are coming out that are very easy to move back and forth between different protocols with their own bridges and feeless bridging and those kind of things. Interesting innovations, and then I guess they come with their own challenges. As soon as they start being used, we need to think about, okay, what are we going to do with it? I think maybe even for something like Swarm, how do you deal with KYC and that kind of stuff when you're now also switching protocols constantly and moving between Ethereum and Phantom and Solana and wherever else you're moving your things.
Yeah, I mean, the narrative's really changing, right? I mean, as far as when a new platform comes, it's like, oh, this is going to be the Ethereum killer. It's now becoming, it doesn't need to be the Ethereum killer. Each of them have their own, sort of pros, cons, and use cases. And it's how do we have them all sort of communicate with this composability? And I think, yeah, that's over the next couple of years. I think we're going to see a lot of growth there.
All right. Fantastic. So I think with that, unless Timo, you have some more remarks, so feel free to jump in. But I think that's quite a good.
No, I think we covered like a lot of the key aspects, right? And it's not at all like a winner takes all kind of situation. I think there's like like Connor said, like obviously multiple level ones, and then there's all the innovation on top, and it's just like early days. And yeah, I would just say let's keep building and kind of keep focusing on like end user value and accessibility. It'll all be fine, right? And just get past some of these like initial kind of maybe excessive focuses on high APRs and moving liquidity from one DeFi platform to another, to something that's a bit more mature. And that's kind of, that's where we see like some of the exciting stuff happening by bringing in new assets and new investor types, and it's just going to grow.
Yeah, and Timo's so right with this sort of like onboarding into the ecosystem. After being in it for a while, we kind of become numb to just that tedious task of even setting up a MetaMask like wallet. Like they just, it seems we get a little used to this if you're deep into it, but honestly, it's a real hurdle for a lot of people right now to even take that step. So yeah, how do we make this more accessible to people? And that's really huge for adoption. And I'm glad that we've got a lot of people working on that, and including obviously the Swarm Markets team. So I think that's basically everything from it.
MetaMask example is actually very important because, like you said, I mean, for us, I think, you do it without thinking. You kind of just go for it, remember your little phrase, and you're through essentially. And I had the example recently because I taught a class for executive education, and part of it was showing everybody how they can set up their MetaMask, and it took quite some time. And I thought, here I am. You kind of just click through it and you do your things, but of course, that's because I've done it before. And when you do it for the first time, it's a little bit daunting, especially when you don't really know and understand what you're setting up and how it all works together. I think that's the challenge.
Still, a lot of people think like these wallets are actually containing the currencies themselves. They're thinking they're containing the assets, but so they don't really know. It's not like, well, what if I lose my wallet? Then everything is gone. And well, it's not like really. It's just keeping track of your keys, right? I mean, so that's what really matters. Is like you just got to back up stuff for your key information, and it's definitely our burden to keep educating people. But that's why calls like these are good. So yeah.
I agree. And with that, thank you, both of you, for your time, for coming on. I think it was a very interesting panel, very educational. We touched, like you said, on kind of a broad range of aspects of decentralized finance. And with that, I'd also like to thank the audience for their questions and showing up, and hopefully see you all next time.
Yeah. Thanks, Max.
Thank you.